Hello and welcome to Stock Market Fever. Occidental Petroleum has confirmed that it will report first quarter earnings on Tuesday, May 10th after the market closes. In this video, we will analyze where Occidental Petroleum has been, where it may be going, and what leading analysts are forecasting. Additionally, you'll also want to stay tuned to the end, where we will offer our forecast for Occidental Petroleum, as well as review a very interesting OXY options play that could be very profitable. If you were prescient enough to have bought OXY Petroleum shares at the beginning of this year, well, whoopee for you! OXY has been on an absolute tear this year, shooting up from $29 a share to just under $65 on Friday. You would be up over $35 a share for a return of over 120%. OXY's fortunes have been rising in tandem with the rising price of oil as a result of increased demand as world economies awaken from their pandemic slumbers and the growing disturbance in oil markets as the result of the Russian invasion of Ukraine and consequences. European Union members have promised in recent days to wean themselves off of Russian oil purchases by the end of the year, and oil has been topping $110 a barrel with no end in sight. In regulatory filings this past week, Warren Buffett's Berkshire Hathaway indicated that it had purchased about $350 million of stock in OXY, lifting its ownership in the company to almost $9 billion. OXY has a stronghold in the Permian Basin, which is the cheapest source of production in the U.S. and is predicted to be a key growth engine in the coming years. In tune with OXY's rising fortunes, stock analysts have been raising their target prices. Zacks rates OXY a 1, strong buy, and CFRA analyst Stuart Glickman raised his hold recommendation to buy just a couple of weeks ago, raising his target by $16 to $65 a share, which reflects a 5.7 multiple of enterprise value to projected 23 EBITDA. And other analysts have also been becoming more bullish on OXY. Raymond James raised their target from $60 to $85 on March 30th and then again on April 25th to $90, maintaining a strong buy recommendation. And Stifel initiated coverage on April 6th with an $84 target. And even Morgan Stanley, which seems to have been behind the ball on this stock, has raised their target from $52 on March 14th to $70 a month later. As for this coming earnings announcement, analysts estimate average $1.97 with current year estimate of $9.29, which would have OXY trading at about 7 times projected price earnings. And what does Stock Market Fever forecast? While we do not offer advice, we are very bullish on Occidental Petroleum. Although there is a risk of an economic slowdown that could dampen the demand for oil, we don't see that happening unless there is a severe recession. The demand for oil is rising, inflation is making our dollars worth less, and oil is a commodity that will only continue to surge, especially as Russian oil gets taken off the market and their production capabilities decline due to the economic embargo on investment, parts, and personnel needed to keep their wells gushing. Regardless of the overall stock market's misery this year, and perhaps because of it, money is being drained from high-tech sectors seeking safer havens. And this has positively impacted OXY, and we believe it will continue to do so in the coming months. We believe that at Friday's closing price of $64.94, that OXY is still a good bet to continue its run-up since the start of the year. We also see an interesting option spread for a fast profit by Friday, May 6th. Even if OXY doesn't go above its current close price of $65. If you were to buy 10 calls OXY, May 13th expiration, 60 strike, for $6.10, the closing ask price, and sell 10 calls OXY, May 13th, 65 strike price, for $2.86, closing bid price, the net cost excluding commissions would be $3,240. If OXY were to close at 65, essentially unchanged from its close on Friday, then the net profit would be a whopping 5,000 exercise spread minus net debit of $3,240 equals $1,760. That would equal a return of 54% in just 1 week. Does this entail risk? Why, certainly. You could lose your entire $3,240 if the stock drops enough. And you also risk losing the profit potential you would have made if you didn't sell the 65 strike price calls and the stock were to romp. And once again, although we do not offer advice, we believe it's a reasonable speculation for a fast ROI for someone who could afford to lose their entire purchase price of the spread. But what do you think? What do you think of Occidental Petroleum's fortunes moving forward? Would you rate it a buy, sell, or hold? And what do you think of the spread idea? Is it too risky, or is it something that could make sense for someone looking for fast income, but ready to risk his purchase money in chasing it? Please leave your thoughts in comments below, as we'd love to hear from you. And be sure to smash that like button and subscribe for future actionable stock market news and alerts right here at Stock Market Fever.